Biggest trading mistakes, breach of market patterns. This is the first video in a series of videos that we call biggest trading mistakes. There are 7 biggest trading mistakes, and the first biggest trading mistake is the breach of market patterns. All right. So in this tutorial, I will be talking first about the first biggest trading mistakes. This series of video is composed of 7 short videos where we will be highlighting, the 7 biggest trading mistakes. Let's get started. In this video, we will be talking about the breach of market patterns, There are 3 market patterns that day traders, swing traders, position traders, and investors must not violate, And I will explain to traders what are the market patterns, the 3 market patterns, and why one should not violate, the market pattern, because it's the number 1, biggest trading mistake, the breach of market patterns. So pay attention carefully. So you can see that the price went up. We are looking at New Zealand dollar, US dollar currency pair. Though we are using a currency pair here, what we are discussing here is valid for stock, for commodity, for futures, and for option. So if you pay attention to this line, the blue line that I draw on my chart, the direction of that line, is positive, or the slope of that line, the blue line, is a positive slope, telling us that the price, is going up. Is also, the blue line is also parallel to the red lines. So the first market pattern is the rising channel. And here, when you look at this chart, the channel, the red channel, is a rising channel. The blue arrow that you see on this chart is indicating to us the direction of the long-term trend. This is the direction of the long-term trend. So if the long-term trend is bullish, and we want to buy, we must wait for the medium term to become bullish, and then when we are about to enter the trade, the short-term trend should also turn bullish. This is about timing the market at the right time, at the right place, to achieve consistent winning trade. Let me explain this. So the trend is bullish. So we need 3 points to draw a channel. So for this demonstration, we have, the 3 points that I'm showing you here, the 3 green spots. With these 3 points, we have, the red channel. We can draw a rising channel, So because it's a rising channel, for trading purposes, we will give priority to bullish signal. That's the normal way. So anytime we are in a rising channel and we are selling, it's a contra trend and there is a risk. Sometimes, my friend, trader can sell during a rising channel, but they know that the risk is a little bit high, and in that case, one must control the risk. But the trouble is that sometimes traders are in a rising channel, but they are selling, and they don't know that there is a risk that they are violating the rising channel. So here I point to you the direction of the long-term trend, which is the blue arrow here. The long-term trend is composed of medium trends. So here on this chart, I'm going to draw another line, and I'm going to color them into orange. The line that I'm drawing now, these are the medium-term trend. So from here to here, this is a medium-term trend. And also from here to here is a medium-term trend. Pay attention carefully to what I'm discussing here, because it's so important for traders to understand this thing. And also from here to here, this is a medium-term trend, the orange lines on my chart. I want you to understand this once and for all, so you may start, making better decisions without breaching, the 3 market pattern. Another line here, this is a medium-term trend, So in order, you want to understand one principle, very important principle, talking about market patterns. The short-term trend form the medium-term trend, and the medium-term trend form the long-term trend. So if the long-term trend is bullish and we want to buy, we must wait for the medium-term trend to become bullish. And when we are about to enter the trade, the short-term trend should be also bullish. So we are trading in harmony with the long-term trend, the medium-term trend, and the short-term trend. It's about timing the market without violating the market. This is the number one biggest trading mistakes. I'm going to draw another line here. My intention is that these videos are short videos so that trader can watch it very fast, okay? So you can see that the blue arrow is indicating to us the long-term trend, but the orange line on this chart are indicating to us the medium-term trend, okay? So here we are, the medium-term trend is bullish, okay? So we have this 3 point, then we draw a line. Now we wait. So you see here, in this section here, the medium-term trend is bearish. So in order to buy or to time the market correctly, one must wait for the medium-term trend to turn a little bit bullish or to reach a support level when the short-term trend is about to get bullish. The opposite is also true in a downtrend. I want you to understand this. Here we have a declining channel. So if I draw again an arrow here, the direction of the blue arrow in this case is again a declining, a negative slope line, indicating to us the long-term trend is bearish. So in that case, trader will give priority to bearish signal on the edge. If you want to know more about trading on the edge, go to www.stochastic-macd.com and click on trading on the edge, and also click on hot spot trading zone. It's critical. So looking at this green declining channel, the long-term trend is bearish. Here again we have medium-term trend. Again, once again, we have 3 points to draw this channel. So this 1 point here. All right. Okay. And then we can say in fact, we can say this point or this point here, because here it couldn't touch the other end, but we can draw another line here, but I don't want to do that, so we select this point. So now we have a declining channel that is confirmed here. 1, 2, 3. All right, the long-term trend is bearish. Priority bearish signal. So what do I mean by priority bearish signal? If the price is going down, the price is looking for a better support level. When the price reaches that better support level or a valid support level, there is a high chance that we may see a reversal, end of the bearish momentum. On the other hand, if the price going up or a financial instrument is rising, is heading towards a valid resistance level. When the price reaches the valid resistance level, for traders that understand the Elliott wave, we will say first wave, second wave, third wave, fourth wave, and fifth wave. Fundamental become bearish, the bullish momentum has stopped. Now we are at a resistance level. The bullish trend has hit a valid resistance level. We see a correction. Price will change direction or may consolidate. So the first market pattern is the rising channel. The second market pattern is the declining channel. And constantly, either on the setter time frame or the signal time frame or the entry time frame, traders are constantly violating the market pattern, and this is the number one trading mistake. So here again, I'll start showing you here the medium-term trend for this bearish trend. So here we see that the medium-term trend, this is the first one, and there was another one here. You can see there's another one here like this. It's another medium-term trend. All right, and again right here, another medium-term trend. All right, remember the short-term trend form the medium-term trend, and the medium-term trend form the long-term trend. All right, you have to understand that. So in order to sell, we must wait for the medium-term trend. If the long-term trend is bearish, we must wait for the. So you see here, this is a medium-term trend. You see in this point here is becoming bullish, but the long-term trend is bearish. So when we see a divergence between the long-term trend and the medium-term trend, we will wait until the medium-term trend turn bearish. At this point in time, this is what we call a hot spot trading zone or trading on the edge. All right. We will now go to the entry time frame, wait for the short-term trend to become also bearish, and then we can sell. So in that case, the medium-term trend is about to turn bearish. All right. And the short-term trend is starting getting bearish. But remember, everything is starting from the short-term trend. For a bigger cycle, it will start from the short-term trend. All right? But if we know already that the long-term trend is bearish, all we need to do is to see a divergence between the medium-term trend and wait until the medium-term trend, the divergence between the medium-term trend and the long-term trend. Okay? If you see a divergence between the two, medium and long term, we wait for the medium to align with the long term, and then we switch to the lower time frame to enter the trade. In that case, we are trading harmoniously the long term trend, the medium term trend, and the short term trend. Okay? It makes sense? Here we are. So here you see a divergence between the medium term trend and the long term trend. The long term trend is bearish, but the medium-term trend is bullish. Now, at this point, which we call hot spot trading zone, now the medium-term trend reaches a resistance zone at a hot spot trading zone. It's about to become bearish. We switch to the short-term trend because the short-term trend forms the medium-term trend, and the medium-term trend forms the long-term trend. So here we see that the direction of the long-term trend is bearish. But if you want to sell, we want to see a divergence between the long-term trend and the medium term. Once we see that, we will wait for the medium term to also start turning bearish, which means the trend is resuming. The bearish trend is resuming on the edge. The bullish trend is resuming on the edge after a divergence between the medium term and the long-term trend. It makes sense? But at the time when we are about to enter the trend, the short-term trend should become also the same like the long-term trend and the medium-term trend. Violation of market pattern, this is the number one, in fact, the number one biggest trading mistakes. Going to highlight this one again. My intention is that these videos are very short so traders can go through them very fast and understand what is happening in the market so they make a their trading decision like a professional traders, okay, without going to the left or to the right. As always, if you learn something for the first time, if you're a new trader, practice and experience will make you a better trader. What we have seen, traders come onto YouTube, they learn something, and they expect to perform like a professional trader in one day. All right? We will talk about all this later on. The third market pattern is what we call a consolidation or a balanced market, when the price is confined between the two levels, one resistance level and one support level. Again, here again, we have the long-term trend. The direction is horizontal. It's stable, all right? It's not going up, it's not going down. So here, if I draw my long-term trend for the year, we see that the market direction is horizontal. It's not going up, it's not going down. My friend, if you work on this, and you pay attention to it, you make the right decision, and you watch each video about the 7 biggest trading mistakes, you start avoiding them and start making the right decision, you will quickly improve your trading decision. Practice and experience, give it a time, okay? So the market direction here is horizontal. Long-term trend is horizontal, okay? Horizontal, which means it's not going up, it's not going down. In that case, what do we do? All right? So if the medium-term trend is going up, it means that the long-term trend is also going up. Why? Because it's not going up, it's not going down. It's horizontal. So when a long-term trend is balanced or horizontal, when we have a consolidation, we focus only on the medium-term trend. Does it make sense? when we have a balanced market or a consolidation, one should give priority to the medium-term trend. Once again, I'm going to draw lines on this chart to show you the medium-term trend, and I'm going to color them into orange as I did before, so this can stick in your mind. So whenever you are trading and you are applying a top-down trading method, which is another biggest trading mistake, traders that are not using a top-down trading method. So I want to highlight the 7 biggest trading mistakes. And the first biggest trading mistake is the breach of market pattern. So when we have a balanced market, one should give priority to the medium-term trend. Here the medium-term trend is up, here it's down. In that case, when the medium-term trend is bullish, we go to the short-term trend, and when the short-term trend aligns with the medium-term trend, we will trade in the direction of the medium-term trend. Very simple, it makes sense, but to put into use, they must practice, okay, digest, all right, and work on that ability until they get it right. You see very often, sometimes trader will, or the setup will be bearish, or the long-term trend will be bearish, but trader will be trading the medium-term trend that is bullish. But in that case, I'm not saying that it's impossible. We do that sometimes. But whenever we are trading against the long-term trend, we should acknowledge the risk that we are taking, okay? We say, okay, long-term trend is bearish, but now the medium-term trend is bullish. Okay, we are trading, we need to be careful because we are trading against the long-term trend. It doesn't mean that we cannot trade it. So when we are trading against, so here we are, we have our the declining channel here, okay, after these 3 points, okay. Now we see that the medium-term trend is becoming bullish. So, but you know that the long-term trend is bearish. You want to trade it carefully, gently, careful. Know that the long-term trend is bearish, okay. So if you are trading against the long-term trend, you will align only the medium-term trend and the short-term trend. In this case, because the medium-term trend is bullish, you enter the trade, you will give priority to bullish signals on the short-term trend time frames when the medium-term trend is bullish. There are more to this. We can discuss this all day long, but I will leave it as it is now because I don't want this video to be too long. I want to highlight to traders the 7 biggest trading mistakes, and the first biggest trading mistake is the breach of the 3 market pattern, the rising channel, the declining channel, and the horizontal. I will be recording another video where I will give more information about this number 1 trading mistakes. If you find this video useful, all right, the first thing you should do is to practice, use a demo account, test it, all right, work on it. If you have been violating the market pattern, you have breaching the market pattern, go back, rectify that error, and start making better decisions. If you love this video, please give us the thumbs up. If you dislike it, okay, we want to know whether you dislike it or like it. Give us the thumbs down. If you love this video, feel free to share it on Google+, on Twitter, and also on Facebook. All right. If you love our videos, hit the subscribe button so you may stay tuned and watch more tutorials like this. Our aim is to give traders clear understanding about technical analysis and how they can also combine the technical analysis and the fundamental without repeating the 7 biggest trading mistakes. All right. I would like to invite you now into the second video where we will be talking about biggest trading mistake, number 2, which is the devaluation of support and resistance level. See you in the next video. Speak to you soon. We are the TSTW24 traders talking about the number 1 biggest trading mistake, breach of market patterns. Speak to you soon.